Hi, everyone, and welcome back to Margin for Error. I'm super excited for today's guest, Lucas Poles, managing partner at Pegasus Angel Accelerator, a venture ecosystem builder with a sharp mandate to break past traditional barriers, build scalable and sustainable startups. If you're interested in how accelerators can impact your startup and its growth trajectory, this episode will give you a lot to think about. So, Lucas, thanks for being here.
And thanks for having me.
Let's start off with your background and your journey. Let's talk a little bit about what your background was like, what led you here, what was kind of that your own tipping point or moment of clarity where you thought, this is my mission?
So backgrounds, I've been investing for probably about 10 years now. Before Pegasus, I was president of Pegasus Angels, one of the largest angel networks in the nation. I was president of the LA chapter. Before that, I ran an accelerator here in LA. And then before that, I started my career knocking on doors in sales. Eventually, I moved up as a sales executive and helped roll out a couple of national technology pilots. But I like to harp on the fact that I started where a lot of the founders are starting now.
That's awesome. That's awesome. So tell us a little bit about Pegasus
Sure.
and what is Pegasus all about and what problem were you trying to solve when you started it? What gap did you see in the startup accelerator world that made Pegasus necessary?
Sure. So Pegasus in itself, our big focus is investing at kind of that inflection point. So a lot of founders maybe will have 5 or 10K monthly recurring revenue. They'll have something that's there and they need a little help with that kind of liftoff. And so our big focus and our big mandate is around GTM. And so there are a lot of founders that are just not good at go to market, which is, I think it's going to be even more prevalent in this next wave with AI. And so we focus a lot around not just figuring out like who the true ICP is in the buyer persona within your actual companies, but really kind of deep diving into growth hacking strategies and how to think outside of the box, because that is typically how you're going to get to that kind of next level of traction.
Got it. Got it. And, speaking of GTM or go to market, there's a number of things that really stands out about Pegasus and your programs. I mean, for example, super low acceptance rates, highly selective, incredible MRR growth. I think I saw something like north of 1,000% MRR growth, which is insane for your portfolio companies. And I mean, on the other side of things, is the fact that there's a huge valuation increase, especially for those companies that are coming through and completing your program. Those are some outstanding metrics. How do you guys do it? And really, what levers are you pulling to make that happen?
Yeah, so I do not promise 1,000% MRR growth in every single portfolio company. My general the general promise that I try to make to portfolio companies is that our goal is to 2x you from when you start the program through the end, whether it's through valuation, through revenue, et cetera. And so honestly, a lot of the growth hacking strategies, like the founders will have something, they'll have some like that little kind of piece right there, but they don't know how to kind of take it to that next level. And so, yeah, I mean, we push the boundaries of every single system that is out there to really find the ways to drive distribution for these portfolio companies. So, I mean, we're working with each one very hands on. We have a very low acceptance rate because we're very intentional with who we want to be able to bring in, because you're working with me personally, you're working with the team. It's not the typical kind of, the GP is hanging out, like you see him occasionally maybe at the beginning and at the end, right? Like we are putting in real elbow grease with these portfolio companies. And so I've helped hire, you name it, at a portfolio company. I've helped do it. So that the hands-on approach probably is a big piece of it, to really help think through a lot of these critical problems that they're facing. But Yeah.
Yeah. So you did mention, and I want to touch upon something that you talked about. I mean, one, that they get to work hands on with you and your team directly. You guys are in the trenches with them. And so when you think about other accelerator programs and their networks, they're really good at things like mentorship or from everything that I've seen, Pegasus aims to combine several of those different dimensions, right? Everything from capital, but also education, go to market execution. How do you think about balancing this? And kind of which pillar do you think really tends to be your biggest differentiator when you think about companies and the Pegasus programs specifically?
Yeah, so I would say, well, that's tough because we honestly we focus on all of the pillars and try to do all kind of very intentionally, right?
Mhm.
The like for mentors, for example, right? We were born out of an angel group so that we could leverage. I think we've got about 850 accredited investors who are all experts in their respective domains to be able to leverage for the portfolio companies. So if you need something somewhere, generally we can try to help out with it. And so I think that's a big kind of critical piece uh, of the actual puzzle. I mean, capital is the small kind of piece, but programming wise, I'd say that we're very I hate to use this word again, but we're very intentional about the pieces that we're doing. And so in a traditional accelerator, right, you have a 12-week set program and set course that each portfolio company is going to be able to go through. Now, what we found is that the challenge with that is that some of the classes are not going to be relevant for some of the people within the cohort. Everyone is kind of can be at different stages at that very kind of early stage, and so you don't want people to be disengaged with their respective education topics. And so the approach that we took is that because we have so many startup programs and we try to help the ecosystem at the very like kind of the ideation stage in that we have I think probably about 60 different modules now that we can
Wow.
leverage to customize a very specific program for each company that is actually coming through. And so, if you are maybe not good at, let's just say GTM, we will build out a couple weeks of the actual program for that. We'll add in fundraising or other things, but it would make it very customized to the startups because they need it in this new age.
Oh, that's really helpful. And I think if, you speak about personalization, I think the way that it's also been kind of shared is hyper personalization. So, it takes a certain type of founder to be able to really be both self aware, but also to be able to take advantage of kind of that access to this customized, personalized experience. So when you think about what stage that founders need to really be in, and if we're thinking specifically of your flagship kind of accelerate program, what stage do the founders need to be in? What do they get? And what do you expect in return?
I mean, uh, for the startups that are coming through the actual program, I would say have some type of revenue, right? It is so easy nowadays to get some type of revenue. I don't care if you put up a landing page with what you want to work on and you got pre-orders for it, right? Show me some type of traction, maybe better than revenue, to show that people are buying into the idea, right? It's never up to me to qualify whether what you're working on is going to work in the market or not. I've had portfolio companies that have 50 or 100x, and I was like, I would never be a user of your system, but I believe in you, right? And so that gives us a lot of confidence to be able to see like, okay, they have some traction. Let's see what they've done. Let's really dive in and analyze it, and then start challenging them on the assumptions that they have made around those kind of pieces. And so to me, the stage that they need to be at have a little bit of traction so that we can really turn up the heat on that. I mean, it helps drastically.
So I guess if we kind of built on that, if we look at the other side, so what are some of the most common obstacles then founders face when they enter your programs? I mean, is there a recurring theme, and kind of what makes or breaks startup progress kind of in that type of environment that you've created?
No, I mean, honestly, I would say time. That's probably the, the roughest thing, right? They're strapped for time. The iteration cycles at the early stage are so uh, I'd say chaotic, right? You are the faster that you can keep up that iteration cycle, the better off you're going to end up being. And so, yeah, honestly, time is probably the biggest obstacle more than anything else.
When you think about the portfolio companies that have, or the companies that have gone through your programs, then is there a company that kind of stood out where, when you think about the before and after, that you really saw this incredible change in trajectory for the company? Is there a story that, or a company that stands out for you?
That is a, I don't want to, I like to give, I love all my children equally, right? Is that the, Um, out of the I know Leticia from Ingenious has done incredible things. She was able to probably 3x her. She came in with, I think, 25K monthly recurring revenue, and she was able to get it up to 50 or 75 by the time that we ended, and is doing just incredible things. It's not, I don't want to take necessarily credit for the founders' hard work, right? It's our job to help you think, right? So to challenge the assumptions because you're so stuck in that kind of day to day, like, oh, I see this, and bringing in kind of a fresh perspective can help just getting a set of fresh eyes on something helps a lot. It's like, okay, well, you are doing it this way, but have you thought or tried doing it this way from a process perspective? Can we automate this? Can we make this significantly easier? And so, yeah, I mean, I've seen, yeah, I'd say that's probably my most specific example, but yes, I love all my children equally.
Absolutely. Absolutely. Do you think there's anything specific? I mean, obviously that's one fantastic example, but when you look at kind of some of the changes that you've seen in them, is there something that that you kind of would point to that caused this inflection? Is there, when you really think about it?
I mean, honestly, it's her hustle.
Yeah.
It was for that specifically, it was 100% her hustle. But then regrounding her and making sure that she was taking a holistic view of the organization. And so there were people that maybe weren't pulling their weight that maybe were able to bring or shed some light onto and be like, well, should they even be here? Or are they actually hurting your culture within the company for what you're setting to be able to drive? So, again, challenging the assumptions that a lot of the founders have made and pushing them in directions maybe they hadn't thought about going. That I would say is probably a good one. I mean, we've had others that uh, had tremendous growth in that they before entering the program had done some raising, closed an oversubscribed round probably 2 or 3 months right after, and really it was a change of story, right?
Mm.
I think that was probably a very impactful one to be able to just kind of show a different vision of where they were going. Is that they weren't necessarily talking the talk of investors around market. And so finding that they had a tangential market right next to what they thought their actual market was a big difference. Maker for being able to go out and actually raise. And so sometimes it's something as simple as that, which is just insane. It's changing your story and communicating it more effectively to be able to get out and go fundraise.
So speaking of fundraising, and I know you have your fair share of understanding and all the shifts in the fundraising market and all the ups and downs that come with that, both from a program perspective, but also, as you mentioned earlier, from an investor perspective. A lot of founders, especially tech startup founders, are thinking about fundraising really early on a more general basis. Is there a piece of advice you give to founders when in just how to think about fundraising? Number one, and then number two, even more specific, given the current market today, what are some of the things that you're seeing in terms of fundraising, and how is that kind of changing the conversation you're having with founders, both in your program, but also others that are just reaching out to you for advice and for some insight and guidance.
Yeah, fundraising is, I'd say it's unique right now, in the sense that like triple, triple, double, double was like the kind of standard metrics that you were looking for at the early stage from a growth perspective. But we now have companies like Cursor, who I think did like 0 to 100 or 0 to 5. I think they're doing 500 million ARR right now, which is
Something
just,
insane. I know.
yeah, which is just absolutely insane. And so there's like this whole new class of startup where it maybe would have taken you 7 years to get to those type of numbers. All of a sudden they're doing it in 18 months. And so there's, I guess, this dichotomy of the types of startups that are out there. And that if you are not really going for that supernova status, I don't know necessarily what happens to the great businesses that are still doing well, that are still following that kind of mantra. And so it's a weird time, I'd say, to be in the actual ecosystem, because
Mm,
with the advent of AI, I don't know what happens to all the SaaS companies that were born in 2018 through 2022, right? Like that's
yeah.
a good space, but all of a sudden is what you just built totally obsolete because of new technology. And that's a really can be a very tough pill to swallow. And you even fall into innovator's dilemma stuff. It's like, okay, do we just axe like half of the stuff that we just built and restart fresh and go on this new direction to be able to go execute? And so there are a lot of dilemmas that are happening right now.
I think that uh, that AI companies and some of these other companies that are having this phenomenal kind of amount of growth is something really unique. Has that changed the conversation you've had with your portfolio companies in terms of their expectation for growth and how fast they should be growing, or even how they should be growing?
Yeah, I think that uh, growth right now. So you absolutely need insane growth. There's no question about it.
Um,
I guess the next stage to that is figuring out if it's sticky growth, right? Because there's very low switching costs for a lot of the solutions that are out there now. And so, do you have the ability to keep the customers that you have, and are they going to actually stick around? And so, I think that's a big uh, I'd say that's a big challenge. It's probably some of the bigger discussions that we're having to make sure that they are on that kind of right path. Um, yeah, I mean, it is up and to the right. It is now up into the straight and narrow. Like it is
yes.
a little insane. But yeah,
So, if we just switch gears just a little bit, going from kind of leading a program, and especially as an investor, and then moving to the operator side, running an accelerator with that rigorous selection or kind of expectations of growth and just outcome and impact must involve some really tough trade offs. What have been some of the big challenges that you have faced building Pegasus? And and have you had to say no when you thought the opportunity was tempting, but it just didn't align with either the thesis, the quality, even the mission of what Pegasus is all about?
yes. I'd say our biggest, same with the founders right time, is probably my biggest obstacle from a opportunity standpoint. The way that I look at some of the stuff that has come our way that we have had to say no to is that if it does not in one way, shape, or form help the LPs, then we probably cannot do it, right? Like my North Star has to be driving returns for them. It is that's the way that it is in venture, right? I'm a steward of capital. I'm nothing more. I'm literally a middleman. I'm not that important. I call it Robin Hood, right? I'm taking money from the people that have a lot of money, and then I give it to poor startups. Like that is literally what venture is in a nutshell. And so everything has to drive towards returns for the LPs. That does not negate the fact that we can help do other things to try to uplift the ecosystem, because we very much have this mentality that that rising tides raises all boats, right? And so the more great founders that we can kind of maybe help produce out of our startup programs, the better the ecosystem gets overall, which means better deal flow for us, which means better returns for the LPs. But yeah, definitely have been things that have not fit into the thesis where we're like,
Mm.
okay, yeah, this looks fun, but it's a distraction from kind of what our core piece is really helping accelerate these startups to drive great returns for the LPs.
So, when you think about, I mean, Pegasus has been in existence now for several years, and it has continued to evolve and to even iterate on itself. What have been some of those challenges of building basically this organization that you've created?
Yeah. So um, even the customization of the programs, right? Like we started cohort and we had specific cohorts with the portfolio companies coming in. And it was in this last one where we realized that AI is moving so quickly that our diligence process, even for the startups, had to shrink. Like we
Yeah.
would in the last cohort, we reviewed I think 1,003 companies
Wow.
in 6 weeks, and that was too long, even from a diligence perspective. We
Right.
lost a company in the middle of that, because it was 6 weeks long, and so we had to move to, being able to jump and seize the right opportunities when they come through, and so we shrank our diligence process down to 2 weeks to make it rolling so that we could have great conversations with the founders and not be overloaded with an insane number of diligence calls. And so we will, it's something that we always have to do, right? We continue to have to iterate on what is there because it's how do we provide more value, not just the LPs, but also for the founders, right? How do we get them to be able to accelerate faster to see that and really help them along their journey as they go through.
So, I mean, you mentioned speed, in a few different areas or aspects. When you think about also then the depth component to it, and you think about how founders want speed, you want speed, investors also want speed, but also they also want sustainable, whether it's something that, as you mentioned earlier, sticky. How do you kind of manage that expectation? Where, investors also want something as quick start to see something, and how do you ensure that Pegasus in particular, is not just about speed, and I think the way that it's been shared is it's scaling, but sustainable, durable kind of business models. How do you make that balance?
That's an interesting question, actually. I hadn't even really thought about that. It really it's coming down to questioning the value of what you're providing consistently, right? Am I
Yeah.
providing enough value uh, where I have some type of competitive advantage over others that is not super easily copied? That again, that value then is able to come through. I'd say in their competitive advantage is going to be much more relied upon than anything else because yes, you have to be able to move insanely fast. But what's the value that you're driving for them?
Mm,
If you're not providing any value, right, then speed's not going to do anything. But if you can continue to iterate on that value, generally you will have a significantly better opportunity around it being sticky.
yeah. Yeah. Have the expectations of investors in terms of kind of speed and outcome, has that changed? I mean, there's been kind of right before the cusp of this insane, kind of AI wave, there was a lot of talk about how, the life cycle of these startups are just getting longer and longer. And, part of it has to do with some of those pre-pandemic or those pandemic kind of investments and whatnot. And then you have now the craziness of all these AI companies and, and kind of the valuation growth, but also actual ARR, actual revenue and scaling growth. What type of conversations are you having with, on the investor side, both, the LPs, but also with other investors that are getting involved with Pegasus and Pegasus programs?
So I would say that I mean, the conversations have generally been around liquidity, right? Like, can the venture ecosystem does not work if we're not returning capital back to LPs who can then reinvest it into other things, right? This is also so liquidity as an overarching theme has been a problem. It's seeming to start to thaw. This is what we felt was going to happen last year, but we've seen, I think, more acquisitions in the first half of this year in the last quarter than we had in the last couple of
Yeah.
years.
Yeah.
Liquidity is 100% still a problem, but again, it goes back to as you kind of mentioned, the startups that raised capital in 21 and 22. They raised at too high of a valuation, and they had either two choices, right? They could either fold the company because they screwed themselves and it was not something that they were ever going to run into. It feels like we've just about finished moving through a lot of those. That the kind of zombie startups that are finally ending and going back into the ecosystem and freeing up talent, or they had to grow into their valuations, which is not necessarily the easiest thing to be able to do, especially at some of the outlandish valuations that were raised at in the SERP era, right? Like that's a problem. And so as we're seeing startups finally get through that, we're seeing acquisitions potentially happen more again, which is helping with the liquidity challenges that the ecosystem has faced. So I think we're just about there from moving through the kind of ecosystem piece. Time will tell. I'm not a huge fan of the macro stuff that is happening right now.
Mhm.
It's super frustrating from uh, I guess from our standpoint, the uncertainty is very
Mhm.
frustrating because that also makes it more difficult from an investment standpoint. But yeah, I think that hopefully in the next probably 3 to 6 months, we'll have a little bit more clarity around a lot of this stuff. And so we should be well positioned to really ride this next wave well.
We've talked a little bit about AI. I know that within the Pegasus portfolio, it has a very diverse group of startups, technologies, and industries. If you had to describe a Pegasus portfolio company or an ideal kind of portfolio company, what would that look like? In terms of, I know you mentioned a little bit about the revenue traction, but in terms of industry, in terms of maybe even the type of technology or the innovation, is there a certain way that you and your team looks at the Pegasus, the ideal Pegasus company?
Yeah. So we are generalist, which
Really?
is weird to say. Just we look at literally everything. I literally have an open application, so if someone wants to apply, apply, right? What I would say from an AI perspective, especially right now, don't just sit right on top of the model, right? Like that is not going to necessarily do much. Have something a little bit more, whether it's uh, 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 some type of data mode that you're going to end up collecting, right? Have something that is kind of that next level. I'd say that the majority of the startups that are doing well, that are fundraising, are leveraging RAG for creating their models, and they have a proprietary data set to be able to really provide that next level of efficacy when compared to the traditional models now. And so I would say have that kind of next level. I'm super interested in what people are uh, the way that people are thinking about this stuff, especially as we're verticalizing a lot of the
Mm.
solutions. And so, no, I mean, honestly, from our view, if you have a startup, apply. We will look at it. I am happy to have a conversation about it. That is, yeah, we're always open to everyone to review.
I will definitely be adding a application link to the description. So for anyone who is interested,
Oh.
so for those who might not be aware, Pegasus is based in LA, but the companies and dare I say is national. And so how much of your approach is really centered on your home base, LA, versus, hey, listen, we are truly a national kind of accelerator program, helping startups everywhere.
Yeah, I mean, we're 100% national.
Mm,
We were telling when we were running the cohort model, we were having the companies actually come to LA to spend time with us.
mm,
But the one of the differences that we've kind of seen running an accelerator pre-COVID and post-COVID is that everyone is so good with the technology now that uh, it might not be worth it for them to have to do that. And so we would rather be able to leverage support wherever they specifically are to be able to help them. So they don't have to be in LA. We have a bunch of portfolio companies here in LA. We've
mm.
got a bunch in the Valley. We've got, I think, a couple in the Midwest, and then one in New York. So, I mean, we're literally everywhere.
Right.
From our view, it is, yeah. I mean, if you're national, we're excited.
So let's look into the future then. When you're thinking about where Pegasus is going to be in the next 2 to 3 years, what does that look like for you?
Uh, more startups, more portfolio companies. I mean, I'm done building programs for a little bit. It's, as I was telling you before, right? I think we built 5 startup programs to help assist the earlier companies get to the point where they are ready to actually invest into. So God willing, I'm not building another one of those for a while. In the next 5 years is probably how do I even, I think the next kind of dilemma that we want to tackle is how do I even hyper personalize it more for the portfolio companies? Do
Mm,
we ourselves create an internal AI model for portfolio companies where they can have a personalized mentor with some very
mm,
specific information, right? Like, is that the next kind of piece of value for the startups and really a differentiator across the board for us? I don't necessarily know, but growing the fund, growing the portfolio companies that we're supporting, I mean, that's my favorite part of this job. It is a lot easier to be a seed investor than is just writing checks and walking away, right?
right, right.
So, um, yeah, no, I like being in the mud with the portfolio companies and really getting the hands dirty.
You've touched on a little bit about like the kind of potential innovations and things that you're thinking about and even potentially working on to kind of keep Pegasus kind of ahead of the curve. You've also mentioned, and I don't think we talked as much about it, but your other programming. Maybe it's worth kind of sharing just a little bit about all of these other programs that you created and kind of how that fits into your own kind of Pegasus ecosystem.
Yeah, sure. So it's the Pegasus startup program. The idea was that, right, we have a very low acceptance rate. I think it's now 0.3%, which
Oh,
is
geez.
just, I mean, it's ludicrous, right? And so the my uh I was very much impacted when I worked with Noam Wasserman, who I consider the godfather of founder dilemmas. He literally wrote the book Founder Dilemmas.
Yeah. Yeah.
And so one of the missions that we personally have is how do I move the needle on founder failure? And so when I looked at the number of admissions that we were getting, the idea is that it's like, okay, if I have this, like, what do I do with the other 99.7% of startups that we didn't invest in? Because a lot of the time they're not a no, they're a not now. Right. Like
Mm,
we're very intentional where we invest. And so it's like, okay, maybe you work and tweak these couple things to be able to then go through. So I didn't have another place to be able to send them. And so I looked out in the ecosystem and some of the stuff that I saw out there was just so bad that I was like, no wonder people have no clue how to actually do this. Because
mm,
while we never know if something is going to work, there are the I can tell you a million ways on stuff that is not going to end up working. And so it's like, okay, absolutely don't do that. This is probably the kind of the right direction. And so we built out 4 specific programs at the early stage that it is you are not getting us, right? So we have built programmatic stuff for them to be able to take, but you're not getting one-on-one support the way that you would if you're going through Accelerate. And so
mm,
for the companies that go through, we've got Launchpad, Ignite D2C, and then we just released the GTM Accelerator. And so if you have the from an from an ideation standpoint through if you have MVP to like, hey, you don't know really know how to sell at all. Like we kind of have you covered. And from our view, it really helps solidify and help that early stage of the ecosystem to then be a perfect place for us to be able to take a look at you to actually invest. And so yeah, we literally have something for everyone at this point.
So you talked a little bit about, for those that are apply. If we were just if we dive into that just a little bit more, I mean, what makes a good application? If there's someone who's like, okay, this sounds like a perfect fit for what I want to achieve. What are some of the what advice would you give to a founder who is looking to put in an application for Pegasus? What makes a good application for you?
That's a good question. Be clear. I can't tell you how many times, and this is happening more and more recently, is that I'll get to slide 7 of a pitch deck and I'm like, I don't know what you do. And that's a
Mm,
real concern, right?
yeah,
But really, like that generally comes from the fact that they haven't talked to enough customers, right? They haven't talked to enough people about it. They haven't shouted it from the rooftops. And so really it boils down to, can you explain this to a kindergartner, right?
mm.
That is probably one of the best ways to be able to. You don't need to have heavy jargon or run through it. You need to be able to articulate it very clearly for everyone to be able to understand, and then generate some type of excitement within the actual deck, right? I think a lot of founders look at decks and they're like, okay, this is I need to put 100% everything in here. They're going to make an investment decision based on this. And it's like, no, no, no. The deck is a tool, right? It's a tool to
Mm.
get a meeting with us. That's the focus. And so if you go into it that way and you can drive some excitement for me to want to have a meeting with you, much different kind of conversation, right? So I would say that is probably the biggest thing. Be very clear. I was literally going through a couple decks this morning and we literally ran into that problem. Going through it with the venture fellows. I was like, I'm not really sure what they do. Like, and that's a real concern. Like, and I can't tell you how often it happens, but it happens because the founders are just way too in the weeds on some of this stuff. And it's like, take a step back, get out of the product that you're in and walk me through the actual vision of the company.
I like the way that framed it. I mean, a pitch deck is a tool. It's a tool to communicate. It's a tool to engage and to sort of think of it that way versus a research paper and just think that you're going to be covering everything and, and anything. And I've seen my fair share of those as well. Uh, um, but speaking of like what just kind of throughout your journey and if we hone in on kind of that your time building Pegasus, what have been your own habits, routines, or mindset anchors that help you to lead just just from a leadership perspective, especially when things are so uncertain or since you've run several programs in different cohorts when things may not be going as planned.
Uh, I feel like it was Tom Hanks that said it like this too shall pass, right? That is
I love
generally
that. Yes. Yes.
so I mean it, everything is fixed with time, right? That
Mm,
is just generally the way that we look at it. So from a startup perspective, yes, it's a try to stay as even keeled as possible, right? This is a absolute roller coaster. I equate being a founder to crawling over broken glass to a bed of nails to sleep. Like it is,
jeez.
it is like it's a rough, so you truly have to love it, right? Like you
Yeah.
have to want to drive change. You have to want to take this to the next level. And so for the advice that I give a lot of our portfolio companies, I'm like, look, don't ride the highs too high and don't ride the lows
Mm,
too low, right? Like, yeah, try to just kind of stay at that even keel, because just kind of not reacting either direction helps so tremendously. Just keep you grounded as you're going through this because there are going to be terrible days. There are going to be amazing days, right? But there are
mm.
also going to be terrible days, and that's how this works. That's what life is, right? You are. It's a it's a good synopsis of life. And so just stay even killed. Keep doing the things that you're doing. If you are, especially from a sales perspective, right? If you're doing the activity and you're going after the specific thing, you will figure out the learnings that you need to be able to go and be
Mhm.
successful.
Is there anything within the program, or maybe it's just working you directly working with them, where you help to provide that type of support? I mean, again, I think the
Oh,
one thing that I think a lot of investors, you included, I think you have shared this. I mean, on the flip side, in addition to crawling on nails and broken glass, that it could be a very lonely journey as
yeah.
well. It could be a very lonely. So how do you find your own kind of tribe? I mean, one, it could be these programs, but what advice would you give to founders out there to make sure that they're finding the right tribe for them to support them, in even non kind of technical functional ways to kind of navigate those high highs and low lows?
Yeah. So, well, with our portfolio companies, I am also a therapist. It's just it comes with the territory. That's just as part of it. The nice thing for our portfolio is that like I'm a minority investor, right? Like I'm not taking a board seat. I'm not there. So once I'm giving you capital, like I don't have much say around a lot of things. And so you get to be honest with me, right? Which is a great relationship to be able to have because it's like, look, if you're in the shit, like that walk me through it. Let's dig it out together. We'll be able to figure it out. And so I am 100% an actual therapist. I would say being CEO it is a very lonely role that not a lot of founders are prepared for. And even with a co-founder, as you're going through it, being at the top can be very, very lonely. And so
Right.
finding other CEOs, maybe that are maybe a little bit further along than you, right? To be able to have conversations with them, to be able to pick their brain and their advice. Because generally, if you're at seed and you're talking to someone at A, they will have a good command of what you are going through, right? And
Right.
maybe be able to reflect a little bit on some of the things that help them get through X, Y, and Z, right? So I generally say find other CEOs, find other communities that of kind of successful startups that can help take you to that kind of next level.
What is something maybe small but powerful that some of our listeners can try this week? So, one practical tip, a shift that they can immediately implement or try, or even at least test to kind of move the needle for their own respective company.
Ooh, I would look at whatever you're doing and try to play devil's advocate against any of your processes, right? Like, I think that being challenging your own assumptions generally leads to a different stream of thought. And to me, that critical thinking piece is very important at this stage. And so play devil's advocate against your main process, right? That you think is working. Maybe you could improve it 10%, right? And what would that do to your actual bottom line? And so,
Right.
yeah, I say play devil's advocate to one of your processes this week.
That's fantastic. Well, Lucas, thank you so much. I know we could probably talk for hours, but this has been fantastic. And I know that all of our listeners will have learned not just a lot about just Pegasus, but just kind of just broader startup advice. So, again, thank you for joining us.
Thank you for having me. Always a pleasure to see you, and congrats on everything that you're doing now.
Absolutely. Thank you. And until next time.